Good evening. What happens on Wall Street doesn't always impact daily life in this country. Many nights those closing numbers go right on by on this broadcast and people get up and go to work the next day. But the situation on Wall Street today was described as a bloodbath. The Dow down just under 300 points, 4% of the market's value gone just today. Close was below 7,000, the lowest since April of '07. The sell-off was triggered mostly by a company called AIG that we all own. It's being kept alive by taxpayer dollars. It lost almost $62 billion in the fourth quarter of last year alone. That's a new record. Today, another $30 billion of taxpayer money went into AIG, bringing the total taxpayer exposure now to this one company to more than $162 billion. For more on what all this means, we begin tonight with CNBC's Trish Regan from the floor of the stock exchange. Trish, good evening.
Good evening, Brian. You know, in the last 12 days, trading days, the Dow has lost nearly 15%. Financial companies are being hit the hardest. Investors are worried because it's clear there is no easy solution to this financial and economic crisis.
Another major sell-off on Wall Street today. This time, investors sent the Dow to a closing level not seen in over a decade.
The anxiety levels, you can see, you can feel them. They're building. They're almost palpable now.
Fueling that anxiety, more concerns surrounding the financial sector as the government extends yet another lifeline, the fourth in less than 6 months, to struggling insurer AIG. $30 billion worth of taxpayers' money is going to the insurer, on top of the $150 billion already committed. This despite news that AIG lost more than $61 billion in the last 3 months, the biggest quarterly loss of any public company in history. On the Today Show, AIG CEO Edward Liddy defended this bailout.
We're really protecting the policyholders. What we're doing is keeping a difficult economic situation from getting even worse by making certain that AIG survives.
Why is that important? An AIG failure could create havoc in the market, not just for AIG policyholders, but for financial companies around the world. Here's why. Banks and other investors bought insurance from AIG to be paid in the event companies, mortgages, or other deals went south. They have. And now AIG has to pay up. If it doesn't, the banks counting on that money will face even greater losses and possibly collapse.
We're focused on taking the steps necessary to restructure AIG so that it, in the long run, no longer poses the type of systemic threat that it poses right now.
But critics argue as long as the government is writing the checks, there's little reason for the company and its investors to worry about the future.
Potentially, the government could keep throwing money down this black hole and we'll never see any of it back.
Now, critics say that the market is already, to a certain extent, judging by these levels, pricing in an AIG bankruptcy. Others will tell you, though, that a bankruptcy could really prove to jeopardize the entire system, and that's the last thing they want to see right now. Two sides of this tonight, Brian.
Trish Regan, where it all happened today on the floor of the New York Exchange. Starting us off, Trish, thanks. And for more on this market free fall, CNBC's senior economics reporter Steve Leisman is with us tonight from their global headquarters. Steve, I heard it said today that at the crux of this is a crisis of confidence. Nobody wants to buy anything right about now. Is that accurate or too simple?
I think that's accurate, and sometimes the simple solution is the right one. And the trouble is when you come out with bailouts like you have AIG and people say, wait a second, what's happening at AIG could be happening at banks all over the place right now, so why should it be any different? And then you see that when these bailouts come out, the market doesn't react positively, so there's a sense that there is no magic bullet here, that we're going to be leapfrogging, Brian, from one to the other. The other thing you had today, Brian, was a bunch of companies come out and just report huge losses. So there's the confidence issue, but there's also the real issue when it comes to companies reporting huge losses, Brian.
All right, Steve Leisman from CNBC's global headquarters tonight. Steve, as always, thanks.